Hi, my name is Lesley Batson. Welcome to another episode of Rebel Rock Money Talk. And today's going to be a special episode because I'm actually recording this for my YouTube channel. If you go to YouTube and you look up Rebel Rock Money Talk, I'm going to start posting videos regularly. But this is also being recorded as a podcast episode. So this will be episode number 10 for the podcast. But it's a dual recording. Okay, so let's get started. Today's topic is 12 reasons why single people should have life insurance. Now, the reason I wanted to do this is because I do get asked quite frequently why I, encourage people to get life insurance. So I think there's the obvious reasons, right? Especially for people who are married or if they have children or they're responsible for people. They understand the benefits of life insurance in that if they were to pass away, that their spouse or their children or those loved ones would be taken care of and have money available that would essentially replace the income that they would have been able to provide. So that is obviously the death benefit. And yes, that is absolutely a benefit for once you have passed away. But one of the real key benefits that so many people are unaware of, especially with whole life insurance, is that you actually have access to this while you're alive. Okay? So whether you're married or single, we'll just get started here. Whether you're married or single, parent or not, these are benefits that anybody can take advantage of with a whole life insurance policy that is set up correctly, and it allows you to build up your cash value. Okay, so again, benefits available to anybody who has a whole life policy. You can use it while you're alive. You do not have to just there are benefits while you're alive, not wait till after you pass away to take advantage of it. But the most critical reasons is the protection from ongoing fees and taxes. So if you've been listening to me for any period of time, you've heard me mention that there are 5 main wealth destroyers, and 2 of them are ongoing fees and taxes. Okay. Now, having a whole life insurance policy, building up your cash there protects you from that erosion of your wealth. Okay. So let's go ahead and get started. There are 12 reasons that I identified here as to why single people should have whole life insurance. Okay. So reason number one, it's where you store your disposable income or any extra money that you have that you want to grow safely. Excuse me. So you should never stop the practice of putting money away into savings, whether you want to call it paying yourself first or just putting money away for a rainy day, or what I like to refer to it as your life happens account. You want to make sure that that is always capitalized, right? It's always funded so that you are prepared for planned and unplanned, expected and unexpected, good or bad life events, right? Because things happen and they tend to cost money. Okay. So really, it's the number one place to put your savings. Reason number 2, it's where you can direct cash that's flowing in from your investments, right? So when you have investments that are paying you, whether it's monthly or quarterly or annual returns, where are you putting that money? You want to put it somewhere safe, liquid, something that you have access to and you have control, right? So a whole life insurance policy set up the right way will allow you to do that. Reason number 3, you want to build up your savings so that you can leverage it for investments, okay? So we just talked about if you currently have an investment and it's cash flowing, where you put that money. But you might be in the position where you're building up money, you're capitalizing so that you can in turn invest. So this whole life insurance policy is a great place, is a great vehicle to put that money away so that you have liquid cash on hand for when the right investment opportunity comes along. How many of you know about these great investment opportunities that come right when you're not quite ready to pull the trigger? Maybe you don't have enough money or you can't liquidate where you have it fast enough to take advantage. Well, here's where you can avoid that missed opportunity. Number 4, you can start a business. Or if you already have a business, you can buy out your partner or expand your business, right? So many of us, we enter the work world, we're excited, we're career driven, and we give it our all. And then a few years down the road, for some people it might take longer, but at some point you realize, you know what, I could be doing this for myself. I could do this for myself. Or you just want to start a completely different business, right? But for any situation, it takes some money to start a business, right? Some businesses will cost more, but you still need to have some money to properly capitalize a business. Having money in your cash value account offers you that flexibility. Perhaps perhaps you already own a business, and maybe things are getting a little rocky with you and your partner, or maybe they're fine, but you just have a new vision for where you want it to go. And if you have had that discussion and you've already been able to kind of put together an offer with your partner, you have funds, liquid funds available to buy them out. Also, maybe you are a dentist, or you have a medical practice, or you have a lawn care service, something where you need to purchase additional equipment. Maybe you just need more space, more office space, more warehouse space. You want to purchase a commercial building instead of continuing to lease out space. For many different reasons, businesses need capital. And if you have a business or want to at some point start a business, you need to start putting money away. And a good place to put that away is in a whole life policy, and in a policy that's structured properly to build up your cash value. All right, reason number 5. You can use it for car purchases or home renovations or even vacations. Yeah, so these are not investments. These are things that we would normally purchase or buy or even finance, right? Many of us put our vacations on a credit card. So that is financing, whether we think of it that way or not. Car purchases, we might get a car loan. Home renovations, we might take out a home equity loan, or again, some type of loan, or put it on credit cards, right? But in some way, shape, or form, if we don't have that money put away and it's liquid, we're financing it. So what if I told you that there were strategies that you could implement where you essentially are the bank, right? If you think about how a bank makes money today, you deposit your money and into your checking or savings account, and they say in turn, okay, we will give you, and here we are in 2019, we will give you 0.5% interest on your money in your savings account. They might give you 1 full percent, okay? But they turn right around and offer you a car loan at 3 or 4 or 5%, or they offer you a credit card at 10 or 15 or 25%, or a mortgage at 4, 5%. So what if you could reverse it? What if you could be the bank and be able to finance these types of purchases and really make money on the things that you finance every day anyway? That's a strategy we can discuss. Reason number 6. Maybe you have nieces and nephews or godchildren, or just others who are deserving, and those that are very special to you. Here's an opportunity for you to pour into them. So if anyone's ever seen the bill for some of those summer camps, it can be outrageous. Maybe your child wants to go to Costa Rica to study the rainforest for a summer. I mean, they might want to do something, very elaborate. And sorry, not your child, but maybe a niece or a nephew, or even just a young cousin. These are people in your life who you can pour into, right? Maybe you can offer to pay for that for them for a summer. And that might really change the trajectory of their life. Maybe that's where they decided, like, yes, I do want to go into biological sciences, or maybe I do want to study something specific because of the experience that they had at that camp. But maybe it's something bigger. Maybe it's more like helping them with their college expenses or a wedding, or even just putting money towards their first home. There's so many different ways that we can pour into the young kids that are around us, even though we don't have kids ourselves. Reason number 7. If you become a caretaker for a grandparent or a parent, or even a special needs sibling, this is a place where if you've been building up money and you have money put away, you can access it for this type of need. And it's usually an unforeseen circumstance. It's something that you typically can't plan for. So you won't already been putting money away for situations like this, because like I always say, life happens, right? So in this situation, you might need to hire a nurse or someone who can take care of certain activities for your loved one. Maybe you need to modify your home. Maybe you need to build a ramp to your front door because now they need wheelchair access. Maybe you need to actually take some time off of work because they just need you. They really need you to physically be there for some period of time. Can you afford to do that? Do you have the flexibility? Have you been putting money away for events like this that are just kind of unplanned for? If you've been putting money away into a whole life policy, that cash value will be growing over time, and it's liquid and accessible, and you control and decide what you want to use that money for, okay? Reason number 8, to supplement your income during your later years. Now, I'm not a big fan of the word retirement, so that's why I prefer to say your later years, because in many cases, we have money put away in retirement accounts, whether it's a 401k plan or a traditional IRA or an annuity. We're putting money away into accounts where we feel like we're getting an advantage by deferring the taxes today to pay them later. But what's really happening is that money is definitely growing, but you're going to end up paying more taxes later because there's more money in the account that will be taxed. But also in many cases, that money is in the market. So that market is going up and down. You don't know, when you're ready to retire, is the market in a good place or a bad place? Is it up or is it down? You don't really know how much money you're going to have, but you do know how much money you need, right? You understand what your expenses are, what your cost of living is. And so what if it falls a little bit short? What if the market was down the year before and now you're trying to plan for, this following year? Well, if you have money put away into a whole life policy, you can pull some of that money. You can use some of that money. It's available to you. It's liquid. So that is a great option to have to kind of fill the income gap. Reason number 9, if you're single and in your senior years, you want to live in a more active senior community, this provides you a great opportunity to do that. You have flexibility because you have the cash available. These communities are great. They're well taken care of. They have lots of activities. They are built in a way to accommodate different needs. And they're really important for just having, continuing to build like emotional and mental stimulation through social events. So if you're single, you don't have a significant other, this might be something you're seriously considering, and that's a great option. So if you've been putting money away, again, you have this money available to put towards basically any facility you can think of and you can afford, right? So this is a great option for, if you're single, a great reason why you want to be building up money into your Life Happens account. Reason number 10, let's say that at some point you develop a medical condition, an illness, maybe it's a chronic illness, and you're going to need treatment, right? If you want to treat it, you may be able to have your traditional medicine or traditional treatments covered under your health insurance, but perhaps you've heard of some type of alternative treatment. Maybe you've heard of a specialist who isn't covered under your health plan. Here is an option. If you have been putting money away in your Life Happens account in these critical years when you really need to have money available, because we've seen how quickly and how high the cost of healthcare is rising. If you're in your 20s, 30s, 40s today, you can only imagine how much healthcare is going to be 20, 30, 40 years from now. You want to make sure that you have money put away to cover that period of your life. So in this scenario, if you do have money that's liquid, it's cash and it's accessible, and you want to, fly to the UK because you've heard about some alternative treatment that they won't cover here in the US, you can think about that with your family and you have the funds to do so, okay? It's about having options. Reason number 11, charitable giving. So this is something that's really, really important to me, and I like to be able to share this with other people because so many of us have causes that we really believe in. There's things that we want to fight for, people we want to support, people we want to help. And we don't have to wait till we pass away to leave money for these organizations or these people or these causes. These are things that we can participate in while we're alive, right? So while we're here. So maybe we want to regularly donate some funds to a particular organization or a particular cause. But maybe we want to volunteer our time. Maybe what we want to give is our time and our energy, especially if you're, say, in your retirement years. You're able to have the flexibility, right? Because you have this money put away and you can live off of it, you have that choice. You have that freedom, that independence to make that decision. You're not necessarily needing to work. Hopefully you have investments and those are bringing additional income to you. So hopefully you've been working with someone, or you have a strategy in place to build up that cash value so that you have it for not just for purchasing, but for giving. And reason number 12, again, one of the most important reasons, is that whole life insurance is a personal asset. That means privacy. It's not like a qualified account where the IRS requires you to file a 1099 every year so that they can keep an eye on how much your balance is growing, right? This is a personal asset. It's a contract between you and the insurance company, which means it's private. It also means that in the event when you do pass away, it doesn't go through the probate process. Everything is private and transfers over to your beneficiaries tax-free. But again, the advantage while you're alive, if you're a single person, is that you can be growing this money and it's not anybody's business how much you have in there, what you're using it for, when you want to access it, and it's not at any risk, right? The principal is safe, there's a guaranteed return, and there's even more return when dividends are declared. So for so many different reasons, just these 12 I've touched on, but for so many more reasons, I strongly encourage people to look into getting a whole life insurance policy for themselves. It's one of the, I guess, products out there that is very misunderstood, and there's a lot of bad information or just wrong information, just a lot of incorrect information. If you are interested in learning more, I am very happy to answer any of your questions. You can book a complimentary discovery call at rebelrockwealth.com/schedule and find a time that's convenient for both of us, and we can hop on a call. My practice is virtual. I help people in several states across the country, across the US, and we meet just like this. I use Zoom. It's an online tool where we can talk face-to-face, but through video. Okay? I thank you very much for your time, and I hope to talk to you soon. Bye-bye.